Today is the 20th day of February, and welcome to Megatrade101.com's video presentation on the foreign exchange market. Before we proceed with the actual chart presentations, weighing the fundamental factors now will define the risks, the volatility, as well as the market sentiments by investors and traders in the foreign exchange market, and of course including the stock markets respectively. Notwithstanding the other equally more important highlights, but the most crucial reports amongst them, not necessarily in its order, would obviously be the final countdown on the Greece debt crisis, the politically sensitive effects on Iran, with oil markets that would have a direct impact with the US dollar, in this case through the US dollar index as shown here on the chart, the commodity prices as well as the commodity currencies, and the current market outlook for the precious metals like gold. Now, with that said, our stand on these issues would outweigh the majority of the market's ability to define its directional price movements for the next trading sessions towards the closing days of the month of February. Although we remain with the same market outlook, as a matter of following the series of events and market directional price movements, we are now showing you the US dollar index on a 4-hour chart over a period of 300 over 301 with a with a moving average exponential technical tool that we have included here, and currently it's working at 7887, as you can see, where the tone of the market has already been confirmed on a negative, with even the combination of the stochastics and the relative strength index here, although it may be on these levels where a possible correction on a daily basis or even on a session to session between 4 to 8 hours of the day would occur. Looking at it on a daily basis here, as you could see that this is actually where the support level would be at the 7880 level, where once it's penetrated would obviously have a long ways to move lower. This is a line chart that we're using. However, converting it into a candlestick formation, it obviously states here that, let's see if we can get a crosshair indication, that the current low is at 78.82 here, and with a high at 79.20, which was basically the opening price for this particular trading session, with the US basically celebrating the President's Day. So although it really doesn't matter, but the continuation of the trading hours here would definitely be substantiated with this market outlook that we are actually doing, and the line indication here would be at around 7835. Once it penetrates it, we still have a long ways to go for towards the end of the trading week and for the end of the trading month. Now let's shift to a weekly basis where let's try to focus on this area and slightly move it here. As you could see that this particular, let's get across here out, this particular session on a weekly basis shows that the prices is lower than the moving average. So the probability for it to move lower is greater than that to move higher. Of course, otherwise there is any particular fundamental that would actually be triggering a dollar up move. But so far, basing on the current sessions that we are right now, we anticipate that the dollar index would still have to move lower. And from our previous outlook, we're looking at the 7805 level. And if it does break this previous low at 7810, 7792 range would be a critical price for the dollar to move lower. Even if you translate it here, concentrating on a monthly, this particular candle bar have indicated a slowdown where a possible price reversal has been made. Looking at it here, with this configuration is negative, and any move lower than the monthly moving average, we are still slightly above it, but 7805 level would be a key price to look at. Of course, the monthly here actually still does not confirm because there is still some room for a slowdown of the dollar, but gradually pacing it. As we have made mention here in our market blog, technical perspective on the Euro-Yen cross rate, which we will also discuss with you later on, that when we mention about the US dollar index, as long as the price or any price above the 79.50, 80, $10 index resistance would trigger a cross rate to further its advance, meaning to say the previous correction for the US dollar index from the, let's see if we can get it here again, from this level, the low, okay, at 7836, from 7836 all the way to a high here at 80.11, where we made mention that this particular corrective move would only be short-lived from the previous down movement on the US dollar. We are actually live today on the 20th of February with the markets moving, and what we have here is the daily charts of the sterling pound cable, the cross rates on the euro pound on a daily basis, as well as the euro yen. From our previous presentation, we did show you the euro yen cross rate. Even if we were concentrating on the euro and the pound, but we have decided since the February 2nd market view report, we've taken that particular position shown here on the euro yen on the February 2nd here, with the long at the price of 100.39, with the current price right now at 105.43. Even if our swaps are negative, but we are on the money around 6 grand, and including the euro pound on the 2nd of February as well, at the 83.46 level, currently at 83.61. Not as good as the first, although the pound here on the 15th rather of February, we have taken that particular long position contrary to the euro pound. Now, why did we do that? The main reason that once you stake along on the euro pound cross rate, you're basically shorting or selling the pound cable as a cross trade, taking a long on that particular correction where the market have shown that there was a squeeze in the market with the low of 156.43 with a spinning top doji here indicating a slow movement of the prices resting on a support within a rising channel. Taking that risk would eventually be taking a good position long prior to taking, or rather after taking the position on the euro pound. From our previous presentation, we did mention about the symmetrical triangle here on the euro yen, where before the announcement of the Bank of Japan easing up their to perk up their economy by purchasing bonds and be able to have moved this particular market on the yen, have taken this particular position here before it actually happened. Although on the current price level here, you would see that there is an opening gap which actually opened at 105.28. Although there was a slight correction to cover up or fill in that particular gap with a low of 104.64, and the current price right now is 105.40. As long as the euro would still continue to move higher, currently the euro right now is at 132.62 working price, which shows on the other chart that we are monitoring at. Although in these levels, the Williams percentage rate is on this level, although the momentum has gained together with the euro pound in anticipation of the agreement in Europe. And here on a daily basis, also with the pound opened with a slight gap in between with a slight corrective move within that particular channel, rising channel. But a more distinct, let's configure this on a weekly basis where we are actually looking at where the breaking point on the support, meaning to say the prices here looked like that it was going to move lower but rested here and moved higher. This is a weekly candle bar where the particular prices high is trying to attempt to move above. Let's see if we can get it right here. There you go. Oh, okay, 1 second. Okay, I'm sorry about that. So here, with a high of 105.68, there you go. So currently working at 105.41. Now what we're looking at is a price level resistance of 106.38 at this level, which is actually the opening, the closing and the opening price of these two candle bars. In relation to the weekly of the euro pound cross rate, you could see here the dominant sentiments of an up move and a down move, an up move and a down move with pullbacks here higher than the previous low have already indicated the possibility that it would have to still move higher, with breaking the resistance of 0.8403 would trigger an extension on these levels. Let's see if we can get it at 0.8437 to 40 price range, together with the pound here, where the rising Fibonacci resistance channel here that we have established would be the actual price range. We're looking at 1.5940 level, which is actually almost near the resistance channel of 1.6020.19, which serves as the resistance of the channel here. If you look at it here, this level, okay. So looking at it on the overall picture, let's convert this into a monthly as well. You would be able to see how the actual price level, this alone has given us a configuration that the price reversal was much more than a probability, because if you look at it on the overall picture, including here, although there is that particular trading range where the support lies at 0.8264 and at 0.8403. So that's where we are looking at right now. And the price, the current price right now is 0.8361, which is quite positive. But of course, that is on a monthly basis. So we have to be a little more realistic, where we can go on a daily. And with reference to our February 6th market outlook on majors and cross rates on our website, we have made mention here that the triangle formation and would normally have the apex not be filled in, but that particular move, the price then was at 101.97. Although we have mentioned to you that we have taken that particular position, and a pause and consolidation after a dramatic move is likewise considered, which it did prior to that particular move by the Bank of Japan. And with that particular position on the sterling yen as well, where a positive tone already has been indicated by the moving average convergence and divergence in a histogram form, and that particular break on the resistance already have shown that there is a strong potential or a market potential for the sterling yen and the euro yen. Now, with that said, I hope that this video would be able to assist you in your trade as a guide and only the best for your trades. Thank you very much and have a good day.